Hello ACCB 129 students. Today we are going to go over problem 5.4a. Again, problem 5.4a. And that's located on page 145 and 146 in your textbook. The first part of it's on page 145, and then if you flip it over, the second part is on the bottom section of 146. And this is a sample problem we're going to go over today. I expect that you've already watched the other videos so that you have a very general idea on how to create this worksheet. And we are going to create the worksheet and then create all the financial statements that go along with this worksheet. And then I will show you how to journalize your adjustments. So at the top of every financial statement we prepare, we have to have a name. And in this particular problem, it is Palmer Creative Designs. And at this point, you should be following along in your workbook and doing the exact same work I am doing right along with me. And this is our worksheet. And again, we just label it worksheet, nothing fancy. And then month ended. There's only one statement that has just the date, and that would be the balance sheet. Okay, and to get us started, they have already given us the trial balance. Now, normally we would get these from the ledgers, but they have already given them to us as a trial balance. So towards the bottom of page 146, it gives us the trial balance. And now we're going to just copy that over. Again, page 146. Okay, so we have a cash and we have a debit of $35,500. Let me make this a little bit bigger. So next, accounts receivable. Copying these straight out of the textbook. And if at any point you need to pause the video, go ahead and do that and just resume it after you have caught up with me. You'll notice a couple of these accounts, they don't have any balance, but we do still need to put the account name there. Again, part of these don't have anything in here, but we need to put them in here, so we'll have a placeholder. And these totals should match exactly what is in the book. So we have a total of 123, 150. I'm going to go ahead and put in my bold total line and my double lines under the bottom. Those are important formatting issues. Okay, so now flip your book back to page 145. And down towards the very bottom of the page it said end of the month adjustments must account for the following items. And it says right here, supplies were purchased on January 1st and the inventory of supplies on January 31st is $1,100. So right over here I'm going to create a T account right here. Right here I'm going to do supplies. And it says at the very beginning of the month, $7,750 is what we purchased at the beginning of the month. And it tells us that the account balance, after all the transactions during the month, it tells us that the account balance is $1,100. This is our beginning balance, and end balance. So these are both debit balances. So in order for us to get to a debit balance of 1,100, how much supplies would we have had to use up during the month? And that's 6,650. How about 6,650, not 60? And this is what we are going to use as our adjustment. So our supplies are going to go down, so we are going to credit our supplies $6,650. And you'll notice I have this little A here. That's to keep track of all the adjustments. And on all of our adjustments, our debit goes to an expense account. So supplies expense. And again, I'm going to put this A here so I can keep track of my adjustments. When we're making adjustments, always a debit to an expense account. Next adjustment, the prepaid advertising contract was signed on January 1st and covers a 4-month period. So it covers an entire 4 months. So we have to take prepaid advertising and divide it by 4. And every single month we make an adjustment for 1 month. So every month we get to take an adjustment of $2,100 because this amount right here, this $8,400 that I'm highlighting, is for 4 months. So we have to make an adjustment once a month for 4 months. And as I mentioned before, the other side of all these journal entries is an expense account. So now we get to take an expense of $2,100 for advertising in the month of January. So now you've got to turn in your textbook to page 146. And adjustment C is about right in the middle of the page. And it said rent of $1,600 expired during the month. We used it up. Prepaid rent is going to go down by $1,600. And rent expense, we're going to make an adjustment there for $1,600. D. Depreciation is computed using the straight line method. The equipment has an estimated useful life of 10 years. So the formula for calculating depreciation is cost minus salvage value divided by useful life in months. So let's plug this formula in. It's cost. Right here on our trial balance, it tells us that our equipment costs $21,600. I'm going to highlight that in yellow, and I'm going to highlight this in yellow. And we're going to divide that, and there's salvage value, minus 0 because there is no salvage value. It's useful life in months, 120 months. Got some formatting things going on. So that means we're going to take a depreciation adjustment every single month of $180. So, as I mentioned before, when we're making adjustments, we always, always, always debit an expense account. And up here under accumulated depreciation, we never touch this equipment account right here unless we are purchasing new equipment or we are selling equipment. So the total here is $10,530. $10,530. Now, here's where it changes a little bit. On my screen, I have to go to the next tab to see my next columns. In your book, you just keep moving on. So now we have to look and see what do we need to do this adjusted trial balance. Okay, adjusted trial balance. If it's cash and there's no adjustment, we were just going to take this debit straight across. Straight across. So in your worksheet, the very top line is going to be 35,500. Let me So again, this is on the same worksheet you've had. On mine, it's on a different tab. On yours, it's just on the second side of your book. So here, accounts receivable, right here. This is line we're looking at. So here's the trial balance, and there's no adjustments at all. So we just bring that debit balance straight over. Here, supplies. Right here, we have a debit balance, and then we had a credit when we did our adjustments. So now what is the balance in our account? We take this debit, we subtract a credit, and we're still going to have a debit balance of $1,100. And if you look back over here, we were given this ending balance right here. So this ending balance, when we did out our T account and did our adjustments, they told us what the ending balance was going to be. And so this is our ending balance. And I'm going to go ahead and I'm going to fill in the rest of these accounts. And so the video doesn't get too long. I'm going to hit pause, fill in the rest of the account, and then I'll let it run for a bit. And then you could pause the video when you need to check your answers. Okay, so this is what it should look like after you've made all your calculations. And I'm going to go back to the other tab for just a moment, and all we were doing is taking the trial balance, looking to see if there were any adjustments, and then calculating a balance. And this goes in this adjusted trial balance. So now I need to get some totals here. And if your balances don't match, you need to stop the video and figure out why they don't match. Do you have something in the debit column that belongs in the credit? Are your calculations off? You need to stop and figure that out right now. So now we go to here, income statement and balance sheet. Income statement and balance sheet. Everything from fees, income down. So I'm going to do a bold line here. We normally don't do that, but just so that you have a visualization. Everything from fees, income down goes in the income statement column. That's a good way to remember it. Fees, income, income statement. And all you do is pull these balances over. That's all I'm doing. pulling these balances over. Okay, and then I'm going to put some totals. The total in this column is 21,630, and the total in the next column is 47,600. But look, these aren't in balance, and the world is not a good place when these columns are not in balance. So now we need to calculate the net income. We have our revenue here. We have all our expenses listed here, so now we can calculate net income. And net income for the month is $25,970. And now we're going to put a total, and 47,600 and 47,600. Now these columns total. So now let's move over to the balance sheet. And everything that's above fees income is going to go in this balance sheet. Okay, I'm almost done transferring these over. And now I'm going to go down here and I'm going to get some totals. So right down here, the total for this, let me bring my line over, is going to be 101,700. And the total over here is going to be 75,730. But wait, these don't balance. Well, that's because this net income right here has to be brought over to right here also. Net income is reported on the income statement and on the balance sheet on the worksheet. So now we can do our totals. And look, everything balances. Let me get some total lines put in here. And all we did was we took this net income right here and we slid it over to this balance sheet credit. It was a debit over here, so it's got to be a credit on the balance sheet. And all we did was slide it over. Okay, so I'm going to pause the video for just a moment, and then we're going to talk about how to prepare the financial statements from here. Okay, we now have all the information available for completing our financial statements. So we have a completed worksheet. Yours is all on just 2 pages in your textbook, but then we can go over here and we can prepare the income statement. I've already pre-prepared these in lieu of time on the video, but we are using standardized income financial statement format. So here, revenue and fees income, 47,600. Over here on the worksheet, 47,600. Everything right here that I'm highlighting goes on our income statement. So let's go back and look. So I would suggest that you go through here and you prepare the income statement on your workbook and then check your answers against this up here. And look, the net income that's listed right here matches our worksheet right down here. It's pretty cool. Statement of owner's equity, that's the second statement we prepare. We start out with beginning capital. I'm going to flip back over to my worksheet. Beginning capital is right there, 60,000. So by the time you're done with your financial statements, all of these numbers that are in the income statement and balance sheet columns that I just highlighted, they will all be used on the statements. And then remember, we took net income for January, and that was right up here. We just transfer it right down. And then draws. Draws was over here on our worksheet, right here. I just highlighted it. $7,000. Next, they took out less money than they made, and so they have an increase in capital. And then we determine our ending capital right here. Ending capital. I just highlighted it in gray. Once we have our statement of owner's equity, we can prepare a balance sheet. And again, you should be preparing these in your workbook and then checking them against the answers on this video. So here is our balance sheet. And this is slightly different. Before, our balance sheet had our liabilities and owner's equity side by side. Well, here they've just taken the liabilities and owner's equity and put them down here. Again, we just copied all these off of our worksheet. All these assets right here, all of them were listed right here on our worksheet. Right there. I just highlighted them. And I know you're probably having to flip back and forth in your workbook, and that's okay. Just pause the video at any time that you need to. And then we put our liabilities, and then our owner's equity right here. Our ending owner's equity comes from our prior worksheet right here. I'm going to highlight them both in blue. Highlight them both in blue. And it goes right back over to here. Now, the last step in this process, we have to journalize the adjusting entries. So back over here, we had made adjustments right here in this column. We need to go and put them in general journal form. So, for instance, adjustment A has a debit to supplies and a debit to supplies expense and a credit to supplies. So we go over here and we journalize supplies expense. And we debit supplies expense just like it was in the adjustments column, and we credit supplies. And we do that for all 4 adjustments. And then the very last thing we do is we post these journal entries to the ledgers, and that is a process that we practiced last chapter. And so I'm going to scroll through the answers, but we're not actually going to go through it on the video. But here is what your ledgers would look like when they are all done. And again, pause the video at any time that you need to. And here's the last ledger. All right, my 129 friends, I would be more than happy to help you in any way I can. Please give me a call, please email me, and I look forward to continuing this very successful semester with you. Have a great day.